we don't give this market enough due. Every day when the futures look down at 4 and 5 in the morning, something happens that's positive, which then propels the averages higher once the session begins. This morning, for example, we got a strong quarter from Domino's with very good same-store sales and a much better long-term growth forecast than anyone expected. On top of that, they gave a 25% dividend boost and an additional $1 billion buyback authorization, which is pretty substantial for a $16 billion company. Now, I'm not saying every company will deliver exceptional numbers, and I'm not saying we'll get one of these positives that bails us out every single day. I am saying that Domino's Pizza is a household name, one that's held the line against inflation with a bunch of irons in the fire, and maybe we shouldn't be so surprised that they could give us such encouraging numbers. Stock jumps nearly 6% today because people didn't see it coming. They were too negative. If you gave Domino's Russell Weiner the benefit of the doubt, well, then guess what? You'd have a nice win. Well, how about Palo Alto Networks bouncing back more than 7% today after monumental bruising after the quarter? At the annual Investing Club meeting this weekend, which I had so much fun at, we told people to buy the weakness in Palo Alto because the disappointing quarter had nothing to do with demand. If anything, there was too much of it. The real problem came down to a necessary change to the business model that will eventually make the company even richer than it was. Sure enough, now Palo Alto's up big from its post-quarter lows. Why? Well, one reason might be because UnitedHealthcare's Optum business got hacked. I bet they could use Palo Alto's full security suite, which is what Nikesh Arora, the CEO, is offering. I think it would be wise to use just one vendor, too. It would end the so-called client fatigue that Nikesh spoke about on our show. You could say this monstrous data breach came out of nowhere. I say these things happen pretty much, well, almost every day, which is why a big reason you can't just write off Palo Alto Networks down 100 points in a day. Or how can we ignore the nearly 4% run in Micron, which is a stock that had been recently left for dead, is not a great companion play to NVIDIA. It is. Micron hasn't had its due. And who knows, maybe tomorrow's Zoom video, right? Maybe they put a smile on our faces with its quarter tonight. These moves are all signs that are emblematic, not of a bubble, but of companies doing much better than expected. Stocks are going up on rational experience. They're not going up on irrational. And they're not going up on the dreaded multiple expansion, where people keep paying more for the same earnings. Remember, everybody loves to point to NVIDIA as the best evidence of a bubble, but their numbers have grown to the point where the stock now sells for less than 27 times earnings, next year's earnings, I should say. And that's only 4 turns higher than Procter & Gamble, 23 times earnings. I mean, come on, it's a steal, right? It's 4 times a little better. I mean, Procter versus NVIDIA, and I love Procter. Chapel Trust owns it. Why does this keep happening? Because great companies can reinvent themselves on the fly. I know that makes me sound like a cheerleader. I don't care. I'm never going to stop pointing out to you because it happens constantly, and no one else seems to want to talk about it because it's too Pollyannish. Walmart reinvents itself with tremendous sales thanks to its nascent advertising business and its rollback strategy. Ralph Lauren and Tapestry show you that apparel can make money. Gap stores, come on, how about that one? That was one of the greatest turnarounds in history. We got takeover bid from for Discover Financial from competitor Capital One. A lack of housing helps give Toll Brothers an opening to sell $1 million homes with ease, not to mention great gross margins. And the refiners, how about them? They keep adding to their earnings because of the decline in oil prices, their main input costs. These are all meaningful stories, people, and they all resonate. If not, then you shouldn't be focused on the market. So the next time you start to feel excessively negative about stocks, remember, every day there are companies doing great things out there for you. You just need to know where to look for them. I like to say, as always, a bull market summary. I promise to provide it just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow. Last call starts now.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.